this morning. But before then, I want to give a brief of how we'll be doing this 3 days webinar. So today, we'll quickly look at market structure and how we intend to frame our entries for all of the setups we'll be looking at for these 3 days, and how we can also incorporate the AQZ into all we do. So if you've been following us in Simply Pips for a while, you know that we try not to deviate so far away from our order blocks, way of thinking. So anybody who brings in Elliott waves, some other complex things, we try to just hush them and let them know we're trying to be focused. But AQZ has a way of fusing in all of these things. If you want to trade order block source breaker, AQZ will simplify it for you and help you take out some of the ambiguities that come in when you're trading some other strategies. So the end of last year, we mentioned that you could actually be profitable with just a line on your chart. Deciding if price breaks above it, you want to be a buyer, and beneath it, you want to be a seller. And that's what AQZ does for us. So in brief introduction, before we go into the charts, you already know that we anticipate price either making higher highs, or in this case, trending, or we expect that price will consolidate. As a trader, our most important decision in the trading sphere is when to buy and sell. Again, most strategies will try to teach you to pick the tops and the bottom. And we've said on several occasions that that's the backbone of why most people fail in terms of getting the buyers. Because if price, this two, if it makes a U-turn, if it stops from that point here and pushes up, your structure will still be correct. If it drops lower, then pushes up, so long as it has not taken out point 0, your structure is still correct. If it stops halfway, your structure is still correct. So usually the problem is, when do we take this buy? When do we really take it? Right? We don't want to take it, put our stops, and we get taken out. So that's the basic problem for most traders. What AQZ does for us is that it helps us find a particular level, and then we are willing to trade either way when price gets there. However, we have a bias at first. So if you trade order blocks, we would have traditionally had another block somewhere around here, for which we're expecting price to retest for a buy, and then we'll have another order block somewhere here, for which we're expecting price to retest for us to buy. So for trending markets, in this case, an upward trending market, your bearish candles are very pivotal. For an upward trend, your bearish candles, which connotes the corrections, are very pivotal. We will be drawing our fibs on those candles. For a ranging market, it's a different kettle of fish. Unfortunately, on a higher time frame, the market ranges more time than it trends. So if you're looking for a trending market, you might not easily find it on a daily time frame. Most times price ranges than its trends. So how do we frame this up? Taking a trade in between the trends sometimes can be dicey. And that's why we have the prophetic candle saving us in those instances. Now, if you're still confused with prophetic candle, then you could come to a higher time frame. let's say the daily, so it doesn't get too high. You pick your peaks and troughs, the high points and the low points, and then you have your fibs drawn at those points. And you wait for price to approach. Your decision to either sell or buy will be dependent on how price reacts at this level. So for a ranging market, you simply box the market, right? Box price, and then take a decision as to whether to buy or sell. And there is no right or wrong way to box, just the way there is no right or wrong way to draw trend lines. Again, if you've gone through the acquisition zone mechanics, you see Doug trying to say there that there are about 5 candlestick patterns. So you can basically go into the chart and find any of these 5 candlestick patterns. And if you get 20 of us together, we might not pick exactly the same. So the essence here is not to be right in how you draw it. It is to be clear in your mind as to when to click on a buy or a sell. That's what matters, no right or wrong. So in summary, we've been able to look at a ranging market and a trending market. And for a trending market, we say if it's bullish, the bearish candles are very important. And if it's bearish, of course, the bullish candles are very important. So we'll take this out and we'll quickly go to GBPUSD. So here we are on GBPUSD, clearly an uptrend. Clearly an uptrend. And because this is an uptrend, we said the bearish candles are very important for us. This became an uptrend only after price took out this high, right? It has been a downtrend prior to this time. But when price broke structure by taking out this high, it invariably became a break in market structure and were potentially buyers. So what would we do at this point? This is the last bearish candle, or this was the last bearish candle responsible for the break in structure. This was the last bearish candle responsible for this break in structure. This was, maybe I should do this. We had something like this. Then we had this push up that broke this point X. That was our break in structure. This was the last bearish candle responsible for this break in structure. All we need to do in this case is draw our fibs from this point to that point. And so when price returns back to this level, we'll be looking for reasons to buy. If it breaks beneath, we'll look for reasons to sell. If it breaks back above, we'll look for reasons to buy. Whatever losing trades would have had here would have more than adequately made up for this bullish move. Now, we had a new high created at that point. This is the last bearish candle responsible for that high. Now I'm on the daily time frame, guys. Daily time frame for now. So I simply just adjust my fib appropriately. When price returned to this area, I would have been looking for reasons to buy. If I'm buying off this level, of course, I would have been stopped out on 2 occasions. If I'm framing my entry off the lower time frame, then I might have been able to avoid those trades. But again, we have a breakout above, and now we are willing to buy. Price traded back again, and then we have our TP1, TP2, and the likes, right? So again, this was the high. This was the bearish candle that was responsible for the break of this high. So our fibs are going to go to this bearish candle now. Break, retest of the area, TP1, TP2. And you can repeat this over and over, right? So we don't take our time. So you notice again, this was the last bearish candle responsible for this high that took out the previous one. So I'll basically just draw the fibs again from this point to this point. And here you see our reasons to buy. It created this high, and this doji-like of a candle, you could use that or maintain this. And if you use this, you move your fib to the other level, and then you'll be looking for reasons to buy. So basically, that's how you frame up on the daily time frame your trades. Now let's go down to H4. I might use a different pair this time. So there was some talk on Gbpusd yesterday. We'll look at Gbpusd. All right, so here you have Gbpusd. Prior to this drop, you would be assuming that price is somewhat in a range. And what we agreed is that if you're in a range, you basically just look for anywhere in the range you can find the candlestick that meets the criteria and draw your fibs from there. And you'll be waiting to see what price will do. So this was a significant high prior to this time. You could draw your fibs, and it is actually an inside bar candlestick pattern. You could draw your fibs from there. And notice how many times price came: once, twice, 3 times for a drop. Then again, you could have this as your area of interest or this point as your area of interest, whichever you have. If you're using this as your area of interest, you have something like this. And if you're using this as your area of interest, you have something like this. Notice how price came straight up and then made a move. We simply just boxed in price. And like I said, if you get 30 traders, they might draw this thing differently. The idea is not to be right in terms of where we draw. Nobody pays us for drawing our fibs correctly. The market doesn't even know we're drawing fibs on our charts. What we're trying to do is put the market in a box and then have a reason to take our trades. Have a reason to take our trades, right? So if price, just a minute. All right. Am I audible now? Am I audible now? All right, thank you. So what I was trying to say is that if you get lost anytime you get into the chart, you find it difficult to just find a headway. Everything looks so confusing. You've tried BTMM, you've tried to learn some of the antics of ICT and you still get lost, then the prophetic candle might just be an answer for you, because it simply gives you a direction of what to do. And if price violates it, you do otherwise. So you simply just wait for the prophetic candle for that particular week. And if it doesn't appear, you trade other pairs. So it removes the ambiguity in the market and puts direction to you. So for instance, here we had a bearish prophetic candle. All we would have done was flip that from this point to this. And then we wait. Notice when price came in here and notice the drop. As at the time price was revisiting this zone, this prophetic candle here had not appeared yet. And then we had the massive drop. So this was your trade, even though you had to wait some days to get it, but this is the trade to take. What it does is that it demystifies the chart and helps you just have a direction. Now we had a new prophetic candle here. We would have basically fibbed this. And we will be waiting for price to revisit this area to sell, which it did. But then we had an invalidation of that bias. Believe it or not, price revisited the preferred entry and we're presently buying. Again, it just simply demystified. You don't need to understand fair value gaps and several things. All you just need to know is that I'm seeing a candle and I'm fibbing it and price is telling me what to do. So here you might have gotten a reason to go long. As small as that might seem, is about 48 pips. I don't know what that will do to your account. But here we have a invalidation of that bias and coming back to retest, and then we are buying. This retest happened before this week's prophetic candle came up. So again, you can have your fib set on last week's prophetic candle and you continue to play that fib until a new prophetic candle appears. You could basically do that. So we'll go back quickly now and go through all our pairs and see if there's something we can trade in the London session. We'll start from AUD-CHF. We'll start from AUD-CHF. All right. So again, on AUD-CHF, second to the last prophetic candle was this. We basically would have fibbed this up this way. And when price came back, we would have been looking for reasons to buy. It eventually closed beneath and would have scratched up that trade with minimal loss, maybe few pips, 1 or 2. Price went back, revalidated, and we would have gotten in for a buy, TP1, TP2. It revisited again, broke beneath, we would have been sellers. Broke above, we will be buyers. And now, price broke beneath and gave us a bearish prophetic candle, for which we will draw our fib to the downside. Here we are, price broke beneath, has invalidated, and ladies and gentlemen, our trade for New York, for London, may most likely be a buy of this pair. So we might be having a retest for a buy based off this candle. So price already, we'll be discussing some level of entry tomorrow, but I know Doug has mentioned that you could have entries at the top there somewhere in between. Sorry, somewhere in between. I could even have one at the tip of the preferred entry. Whichever one you do, we already have an entry on this trade, on this particular pair. So our bias for now is a buy. It's as simple as that. And if we buy, of course, we will be targeting these highs here for our take profits. And that could give us something like this. And if it does play that way, we would be risking about 12.5 pips for a possible 54 pips. That is a 4:1 risk reward ratio. So what I'll do here, if I prefer to take the trade off preferred entry, I'll simply drop an alert at that point and tell me that once price crosses that, it should alert me. Right, so my alert is set up and the trade is staged to happen. If price comes to that level, it will alert me and I'll be taking a buy targeting those highs. That's AUD chef. AUD USD, again, we said you could hold the previous AQZ zone and hold it right until a new one appears. So if you had followed that, we had this last week. Again, we'll fib from this point to this. And notice how price, after the breakout revisited, it would have picked one of our entries. If you're one of those who love to have your entries on like 3 positions, it would have picked your very first entry, perhaps even the second, delivered 1, 2. So at the beginning of this year, we're looking at asymmetric compounding. And believe it or not, AQZ has just provided an easy way to carry out asymmetric compounding. By Sunday, the AQZ FX team will be looking at the beat the bank entry method, which more or less streamlines your entry to a lower time frame, specifically the 15 minutes, like we would usually do the LSB in Simply Pips. And what that does is that you would have gotten a refined entry somewhere around here, and your stop loss would have been smaller, and this would have been well over a 1:5 trade. Of course, you're just looking for 1:3, right? ICT traders would clearly see the fair value gap that this pullback came to fill, right? You see the fair value gap it came to fill, but we don't want to confuse something that is this simple. So price traded back and bought. Notice how price traded back again this week. If you only had your AQZ staged and waiting, price came back straight, TP1, TP2, straight up. And I tell you, the biggest challenge is usually in waiting, right? So in fact, if you had staged your 3 entries here, it should have picked them at this point and hit your TP1 before dropping down, right? So there are 2 ways you could trade this. You could trade this off the H4 like this without going down to 15 minutes. And that way you just stack your entries in 3, have your stop loss beneath the lower, underneath the AQZ block beneath, and then you take your trade. So for this, we have a new AQZ prophetic candle. So here we are. And for this, we would be anticipating a drop into this region, and then we'll be going long based on this. Again, it would be nice to target these highs. to be nice to target those highs. So we'll have about 2.5 points hit. Let's move to the next one, AUD card. AUD card, I don't know why AUD card is suddenly trying to become like AUD chef with the wicks. But here we are, we have the last prophetic candle there. We will just fib and wait. And it has played with our emotions on several occasions. Presently, we're in a buy. Nothing more to look for there. AUD JPY. Okay. Again, AUD JPY, if we followed exactly what I just said, this was the previous AQZ. And even if it never came back to the test, if we had just waited, we would have had a wonderful feeling. I think this should have been yesterday, if I'm right. TP1, TP2, all because we waited. All because we waited. So if you've been in Simply Pips for a while, we normally say we are paid to wait. Stage your fibs, have your alert, wait for price to come to you, take your trade. We can't go through 28 pairs and not have a setup. It's impossible. AUD NZD. Now for AUD NZD, wonderful, wonderful one. If you joined us early, we mentioned how you could use the candlestick patterns as a roadmap itself outside of the AQZ fibs. And we said when you are in a trend, in this case, a downward trend, every bullish candle matters. So let's start from this level. We had this, and we would have been anticipating a buy, a sell, I beg your pardon. Price came, invalidated, would have gotten a buy for maybe TP1, then revalidated and never really gave us an entry. And it kept dropping throughout last week. We had no AQZ fib for this prophetic candle, I beg your pardon. So how would we have traded this? This was the last bullish candle responsible for that low. You just fib that and see if price will come. Price never did come back. Then you have this bullish candle as the last bullish candle responsible for that low. You drag your fib to that level. Price came straight up and then dropped. Then you have this bullish candle as your last bullish candle responsible for that low. You fib that also. Price came straight up, preferred entry, dropped. And that's how we would have played this all the way down. Now we have a bullish PC. So we'll fib this way. Price has broken out and price has retested our first zone. If it comes any lower, we will be interested in taking this the opposite direction. If it violates this and closes in beneath our preferred entry, we will resume our sell. So like we mentioned, it's going to be a complete package. We'll look at the psychology of trading, how it becomes very difficult for most traders to reinitiate a trade after their stop loss has been hit. Most traders get frustrated, they lose their appetite, they lose sleep, they get angry, they punch the wall. With AQZ fibs, you don't need to throw tantrums, right? So once the market takes your money, you simply wait. And then you simply wait, and then you can do you simply wait. Please, is not right to write on the screen when someone else is teaching. If you love drawing, go organize your own Zoom and draw. So I've kicked that person out of this Zoom. That's being rude. That has been very, very rude. All right, so let's move on. Clear all drawings. So we'll be waiting. If price comes back, we'll go. If it violates it, then we will go down. Again, very, very straightforward. What it does is it just put, and if there are instances where price comes for a retest, invalidates, we're looking for sell, it revalidates, we're looking for buy, it invalidates, we look for sell, and then it drops massively. We would have lost 3 times. In those instances, the wins will more than cover up for the losses. It will more than cover up for the losses. There are, I don't have the statistics, right? But marking up the charts over and over, you have few occasions where price, if you're trading off the 4-hour, basically, not the 15 minutes, if you're trading off the 4 hours, you have few occasions where price runs straight to your SL when you use these fibs. Usually what you will have is price invalidating your bias, and then you are going out with a small scratch, right? So let's say, for instance, you were planning to buy and price comes and closes beneath the preferred entry on the 4 hours. Again, I repeat, on the 4 hours, not the 1 hour, on the same time frame. And let's say your stop loss was somewhere beneath here, based off the 4 hours. Noticing this, you notice this wick here, so you place your stop loss some pips beneath that low. You don't have to wait for the stop loss to be hit any longer. You just scratch the trade and take that loss, and now you are basically a seller. Again, if price comes and closes above your preferred entry, again, you scratch that small loss, and now you're a buyer. The point is that you are no longer, manipulated by the market maker. If he's buying, you are there waiting for him. If he's selling, you are there waiting for him. If he's dancing, you dance along with him. When he decides to strike, you are there. Basically, that's what this does. So we'll be waiting for this. Again, I'll set my alerts somewhere around midpoint and wait for price to come. If it does come, we will be waiting for price. If I get the alert, in case some of you have the free version and you can't set so many alerts, I'll drop it in the group. We have card CHF. Very good example of what I was explaining. All right, so most traders within our circle don't like card, and rightfully so. But notwithstanding, we'll mark up this so just you could understand what I just said now. So if this was, we've staged our fibs, price traded, this was the breakout, price traded back. Let's say you actually set your sell limits. This would have hit your SL. Now, if this hit your SL, say you now set your buy limits, right? This would have picked the first entry straight up to maybe TP1. And if you didn't take out the remaining 2, this would have come back to pick them. And again, it should have not hit your SL per se, but you see at this point, very good one, your SL would have been below this block, this deep blue block. Your SL would have been beneath it if you're trading off the 4 hours. Notice how price came close beneath the preferred entry without really getting to your stop loss. You simply just scratch this trade, and now you are in a trade for a sell. If price drops down, you would have basically covered up for whatever loss you had initially. So in this case, we are presently in a sell off CAD CHF. We are presently in a sell off of this prophetic candle. I'll jump the CAD and the CHF pairs. I don't like them. All right, so we're in a buy here. If someone asks in the group, in the chat, how do I get this indicator? I assume you are referring to the prophetic candle indicator. You need to join the AQZ FX channel. The instructions are there. I'll drop the link as we go on. So again, notice the breakout would have been in on this trade TP1 and stopped at the midpoint. If price comes back again, we'll still be looking for reasons to buy. And we'll be targeting this here. You can see the fair value that hasn't been filled. We might be coming that way if price gives us the opportunity. Euro GBP, I'll just leave this out. Euro CHF, of course, Euro USD. Okay, so for this is Euro USD. For Euro USD, we have a bearish PC. Price broke beneath, price tested, and now giving us reasons to sell. So we are presently in a sell on EU, targeting these lows. TP1 has been hit already, if you wish to know. Triggered us straight at preferred entry, went straight to TP1, came back again, that's hit TP1, and we might just be on our way down. If it invalidates, we will begin to look for reasons to buy. What this does is that you don't care about what is happening in the market, news or no news. You're trying to look for some other patterns that usually have ambiguity in them. The only movable part in your chart is price action and your bias. So if price invalidates, you change your bias. If price validates, you change your bias. Then your fib is staged and static. Now, so when you have so many movable parts on your screen, then you have to consult each and every one of them. It might become a little bit difficult to take your trades, especially if those parts also do not have static points. So let's say you're trading using stochastics or you're trading using RSI, you could have static points on them, maybe your 70 and 30, and that could give you some form of direction. But where you have to guess what price is doing or what your indicator is doing at every point in time and it's not static, then you get lost in the market. So that's for Euro USD. Euro CAD is a bullish scenario. I'll tell you some things. There are times that when I see the prophetic candle, I tend to want to disagree with it based on maybe some other residual knowledge from somewhere. I feel, no, I should be selling from here and not buying. So how do I resolve those conflicts? I simply just do what the rule says. So let's say I was anticipating that price should actually sell because for Euro CAD, I think is in a downtrend and blah, blah, blah. I just stage my fibs. And since my intuition is telling me I should be selling, then I'll wait for it to invalidate it, then I can go in for a sell. Nope. It's basically the same thing, right? Somebody's asking, is there a difference between preferred entry and the mean threshold? Is similar, right? I won't say it's the same, but it's similar. And it's similar because the mean threshold, you basically look at the body of the candle. So let's say you have, let's say you're having this candle here, this bearish engulfing. So if you're looking for the mean threshold, it is basically the middle, right? Again, if you draw your fibs, that point is 0.50, which is also the middle. Now, you begin to see variations in the team when the engulfed candle has a long wick. So for instance, if this is a bullish engulfing candle, the mean threshold will still look at the middle of the body of that bearish candle, the middle. That's what the mean threshold will look at, the middle of the body of that candle. But if you're using these fibs, right, that's the preferred entry, different from the mean threshold. Again, if you have been with Simply Peace for a while, we simply tell you that every strategy is a story. Everybody claims that my strategy is correct, but every strategy is actually a story. So you get confused when you mix two stories together. So one says that the elephant came up from the octopus, and another one say the elephant came up from amoeba. If you mix them up together, then you get in trouble. Just stick to the rules of a particular one, and then you should be fine long term. Let's move on to Euro AUD. So in case of Euro AUD, we have a bullish PC that has been invalidated, and now we're looking for reasons to sell. If it revalidates, we will buy. Again, a lot of trader psychology coming in here. If you don't want to lose, then you don't want to be a trader. So let's say you were anticipating a buy. After it pushed up, it came back, gave you a reason to buy, hit your TP1, TP2, right? Came back to our AQZ zone, gave us TP1, TP2, and then fell, invalidated that bias, pull back. Believe it or not, it gave us TP1 in this sell, So if you were buying before and it hit your stop loss, this sell simply gave you back your whatever you've lost, right? So let's flip this fib and see what I mean. So when it closed beneath, if you are taking your sell from that zone, it actually hit TP2. It actually hit TP2, which would have been 2 times whatever your stop loss is. You would have recovered whatever you lost, in essence, right? And all of this is just looking at one point on your chart, just one static point on your chart. It's amazing, actually. So this is a bullish, invalidated. We will be looking for a retest of our zone for a sell. Let's go to the GBP pairs. One annoying pair using the prophetic candle has been GBP USD. For 3 weeks back to back, it hasn't given us an entry. 3 weeks back to back. This was the first week. Sorry. Yep, this was the first week. It didn't give us a preferred entry retest and it ran away. Well, the second week, again, it never even came back close to the AQZ box and ran away. And then the third week, same thing, running away. So how would we have traded GU? How would we have then traded GU? We could have traded GU basically just using our daily blocks. So we'll have our daily block there. This was the last bearish candle. If you fib it like we did at the beginning, we might have gotten an entry. Then who says we'll have to trade GU? If you don't trade GU and you see an entry in GCAD, who cares? Who cares actually? Right, so here we have the PC for this week. Again, notice that. Isn't this sweet? TP1, TP2, and for those of you that like counting number of pips, well, let's count. This is well over 100 pips, right? About 118 pips in the direction of our trade. The direction of our trade. TP1, TP2, straight up. Simply because we were able to identify a candle and we place a static point on our chart. I won't be surprised if in another 1 or 2 years, AQZ is as well known as BTMM and several other things in the market, right? So here again, take out all of this. Here again, bearish for this week. We have this. It invalidates. Just watch this, watch this. Can you see this candle closing above preferred entry? Immediately that happened, it simply means this bias has been invalidated. Notice the retest of our block, and then we should be around TP1. Now, let's flip this fib. Boom, TP1, right? TP1, hit already, right? Again, very good. If you had lost, you would have just recovered. Your account might not have grown, but it won't go down either, right? So for this, we have breakout, retest, didn't really come to preferred entry, and it's going. Right, so it depends on how you want to trade. If you want to set your pending orders, you could. You eventually be profitable. If you love going down to the lower time frame to frame up your entries, fine and good. We'll be discussing that tomorrow, hopefully. Again, this ran out on us without really giving us another entry. That is GJ. Broke out, never really came back. And same thing happened the week before. But if you use what I mentioned at the beginning, like just look at your chart, have your fibs set on every bullish engulfing, notice that test again and push to the upside from the PC of 3 weeks ago. A retest, push, and that's it. Let's wrap this up now. NU is a sell. We have a sell there. NU is a sell. It has hit TP1 from the tip. If you need to have access to the preferred prophetic candle, it's on TradingView, but you need to be granted access. Someone can just drop the link to the chat, to the Telegram group there. This was from last week. Notice how price traded in this week and dropped TP1, TP2, TP3. It never really gave us an entry last week, but we caught it this week, and that would have been okay. That would have been okay. All right, let's go to gold. In all scenarios, you fib from week to week. In all scenarios, you fib from week to week. So this is a bearish prophetic candle. We fib from week to week bearish. Notice what happened. price broke down, pushed back, and we are now in TP1. So if you had placed your 3 pending orders, it would have picked 2, and it should be in TP1 right about now. Right about now. Let's look at Bitcoin. All right, so for Bitcoin, we have a bearish PC. If you've been following me on TradingView, if you are not, follow me on TradingView. I've been giving some source on Bitcoin. We anticipated this drop. And I think in the very last video, we did this on the daily time frame. We noticed that we had a bullish order block on the daily time frame. And when price came in here, we're buyers. Price came in again, we're buyers, but we noticed that it was creating these lows. So we anticipated that price might continue to drop lower. If it violates our PE, there will be sellers. But before then, we had looked at the futures, BTC futures. We noticed that we had 2 gaps. It used to be 3. One of them had been filled. We have 2 gaps at this level and at this level that price may just want to come fill. So we were bearish. And you notice price has been playing down our AQZ roadmap. We also looked at BTC dominance. And at that time, it was here, we had this red line, and we say if price breaks beneath the red line, we'll be targeting this zone, and price is about approaching that point. So if you've not followed me on TradingView, please do. Let's look at US30 on the 4 hours. US30 on the 4 hours, we have a bullish. Please, if you have a small account balance, don't trade US30. That is just another way of donating your account balance to the market. So we'll be looking at this of the US30 right about now. SPX 500. Bullish, the same thing. We're presently at preferred entry too on SPX 500. Somewhere around preferred entry for a buy. NAS 100. We should be buying NAS 100 too. We initially had a bearish AQZ, which has been invalidated. In fact, invalidated, and we would have hit TP1, TP2, TP3 already on that. We would have hit TP1, TP2, TP3. This candle invalidated it, and all of this would have been our TPs. That doesn't mean it didn't sell. It sold after the breakout, retest TP1, TP2, invalidated TP1, TP2. German 30. German 30, where we have a bullish PC for this week and price hasn't come back to retest. If it does, we will be looking for reasons to buy. I tell you, this thing makes analysis of, you want to analyze the chart very, very, very simple. Okay, so my personal take on GU as to wrap up for tonight. Tonight, well, depending on where you are. If I go to the daily, on GU, if I go to the daily on GU, or rather the weekly, GU is fully bullish. If you follow the analysis for last week, in fact, for the last 2 weeks, I've been bullish the GU. We have a zone here that GU needs to come to on the weekly time frame. Right? Again, if you look at the monthly time frame, you find that same zone, just that this time is somewhere around here. Right? So if you go down back again to the daily, you understand that GU is presently at the monthly order block. So you should expect some reactions, but I will be happier to see GU push further into this weekly order block. And then we'll begin to look for reasons to sell. So on Sunday, I think we did something similar to this. We had a top-down analysis. So from the weekly time frame, I have a bearish engulfing candle here, which qualifies for my fib. So I can have that. And then I'm watching price as price climbs up this ladder to that point to see reasons to go short. If you're not a swing trader, this won't mean anything to you. You might want to trade off the 4 hours. If you love trading off the 1 hour, again, switch one. Let's leave 1 hour till tomorrow. It's 9 on the dot. We can leave 1 hour till tomorrow. I'll give room for like 2 questions. I'll call it a wrap. We have what to look out for already. If you have the PC indicator, you don't even need this webinar. Basically, just go draw your fibs and you come back to your chart once every 4 hours. So again, for the purpose of making it clearer for my guys here in Nigeria, this is a 4-hour candle. It's going to expire in 1 hour 58 in about 2 hours, right? So that will be 11. That will be 11. So add 4 hours to this, that will take us to 3, then to 7, then to 11. Then, so for us in Nigeria, these are our magic hours, right? So these are magic hours. 11, whether AM or PM. 3, whether AM or PM. 7, same thing. So for every 4 hours, we're coming back to check. It's at the close of 4 hours that we can either be validated or invalidated. So if you're trading off the 4 hours, you could basically come back to your chart at the top of these hours and decide if you want to take your trade or not. And that has made trading pretty easy. If you have a smaller account or you're trading a prop firm account and you want tighter stop losses, then after framing this up on the 11 at this top of these hours, then you could now start coming back to your chart, maybe the top of every hour, as you frame it up on a lower time frame for entry. How can you follow me on TradingView? Very easy. On TradingView, my name is Bishop Raj, as it is everywhere. Right? So just come, you see follow, you click on follow. You want to see ideas I've dropped so far. I've dropped these ideas so far. I mentioned the simplest way to apply Fibonacci AQZ fibs to prophetic candles. We looked at trading daily order blocks and the AQZ. These were analyses on Bitcoins when I mentioned it was going to drop, showing bearishness. This was January 18th. It's time to buy Bitcoin. And so you could go look them up. All right, let's meet again 8 a.m. tomorrow. Have a wonderful trading day.